A few years ago, calling SpaceX a trillion-dollar company would have sounded like the sort of thing a man says right before trying to sell you moon acreage. Now, serious financial reporting says SpaceX is weighing an IPO that could value it around $1.5 trillion to $1.75 trillion. That raises a much bigger question than whether Elon Musk is rich. It asks whether one company has quietly become part launch provider, part telecom giant, part defense asset, and part infrastructure layer for modern life. Hello, my name is Gene Botkin. I study space and its growing importance in our daily lives. And I'm building a society for people who want to participate in the new space age. Our topic today is the claim that the SpaceX IPO is worth more than $1.5 trillion. Let's begin. The assertion sounds ridiculous at first. That is part of its charm. The SpaceX IPO is worth $1.5 trillion has the flavor of a headline written by a man who keeps a Mars colony map in his garage and calls it a retirement plan. Yet the number is not floating around because a few excitable fans got loose on social media. Morningstar argued this month that SpaceX could be marketed in a mid 2026 IPO at around $1.5 trillion, with the company potentially floating about 3.3% of its equity and raising roughly $50 billion. That would make it the largest IPO ever proposed, which is the sort of sentence that used to belong to oil kingdoms and old industrial giants, not a rocket firm run by the human equivalent of a lightning strike. That is the first thing the audience needs to understand. We are no longer dealing with a fringe fantasy about space riches. We are dealing with serious financial institutions trying to translate SpaceX into a language the market understands. Morningstar's case also notes that this valuation would imply a towering multiple of roughly 94 times 2025 revenue, which tells you the market would not be buying a normal transportation company. It would be buying a claim on a future. And that creates the real mystery. If investors are willing to entertain a number this large, then rockets alone cannot explain it. Something bigger has to be hiding inside SpaceX. That is where the story stops being about launches and starts becoming a story about infrastructure. The reason this valuation conversation refuses to die is simple. SpaceX is no longer being judged as a rocket company with an interesting side hustle. It is being judged as a communications business that happens to own the most feared delivery system on Earth. Estimates that SpaceX generated nearly $16 billion in revenue in 2025, and that Starlink alone produced about $10.6 billion of that total, or roughly two-thirds of company revenue. It also estimates Starlink served 9.2 million subscribers across more than 150 countries, which is the sort of scale that makes investors sit up straight and pretend they always believed in orbital broadband. That matters because launch revenue is impressive, though recurring subscription revenue is what makes large valuations feel less like delirium and more like finance. A rocket launches once. An internet customer pays every month. One is a spectacle. The other is a habit. Markets adore habits. They see them and start humming like a refrigerator full of cash. The story gets even larger when you notice where Starlink is heading next. T-Mobile's satellite service page says its T-satellite offering with Starlink provides texting and select satellite-ready apps in outdoor areas across the United States where users can see the sky, with picture and voice messaging slated to expand to more devices. Starlink's own materials say its next-generation mobile satellites aim to provide full cellular coverage and much greater data capacity. In other words, SpaceX is moving from internet for remote places toward backup connectivity layer for modern society. And once that sinks in, the next question becomes obvious. If Starlink is the money machine, how does SpaceX keep feeding it faster than everyone else? The financial story starts to make more sense once you see the machine underneath it. Starlink is not valuable because satellites are magical. Satellites are expensive little refrigerators full of ambition. Starlink is valuable because SpaceX can keep throwing them into orbit at a rate that makes competitors look like they are mailing theirs one envelope at a time. Chuckles, Space.com reported that by March 10, 2026, SpaceX had already completed its 30th orbital mission of the year, and 24 of those launches had been dedicated to Starlink. That is not a side project. That is industrial output. It is the orbital version of Henry Ford discovering caffeine. This is where the company's advantage stops being glamorous and starts being structural. SpaceX does not need to wait around hoping another launch provider can get its satellites up on schedule at a price that does not make accountants cry into their keyboards. It owns the rockets, the launch rhythm, the landing system, and the constellation it is feeding. The company can manufacture growth and then physically deliver that growth into orbit on its own timetable. SpaceX's own launch page shows that cadence continuing through March, with more Falcon 9 Starlink missions already lined up from Florida and California. That is a brutal advantage because every launch does two jobs at once. It adds capacity to Starlink, and it reinforces the operating discipline that keeps SpaceX ahead. Once a company reaches that point, investors are no longer looking at a rocket firm with a promising product. They are looking at a self-reinforcing system. And once you have a system like that, the next question is not whether it can grow. The next question is how much of modern life it can wedge itself into. By this point, the story has outgrown the stock market headline. SpaceX is no longer interesting because it launches rockets and sells internet service. It is interesting because it is drifting into the category of infrastructure, and infrastructure gets valued differently. People can complain about it, roll their eyes at it, and post angry little speeches online. Then they still wind up depending on it. Chuckles. That is usually how infrastructure works. It is not always loved. It is simply there, like concrete, plumbing, or the one uncle who somehow knows how to fix everything. The clearest sign of that shift came in January, when the FCC approved an additional 7,500 second-generation Starlink satellites, bringing the total authorized constellation to 15,000 satellites worldwide. Curious, the agency said the expansion would support broader high-speed, low-latency coverage, including stronger mobile and supplemental coverage from space. That is not the language of a quirky niche product. That is the language of a system being folded into the communication skeleton of modern society. The same pattern appears in civil space. NASA's Artemis Partners page states that SpaceX has the contract to develop its Starship human landing system for Artemis 3 and Artemis 4. In plain English, NASA is counting on SpaceX for a central piece of America's return to the moon. Once a company sits inside national broadband discussions, emergency connectivity, and the country's flagship lunar program, investors begin to see something larger than a commercial success. They start to see a private firm that public systems are beginning to lean on. And that is where the valuation story gets dangerous in an interesting way. When a company becomes this embedded, investors start treating it less like a business and more like a platform the rest of the world has to route around or through. That makes the upside feel enormous. It also makes the next question unavoidable. If the case for SpaceX is so strong, what could possibly make people hesitate at $1.5 trillion? This is the part where the room gets quieter. Up to now, the bullish case has had real muscle behind it. Starlink is large, launch cadence is absurd, government dependence is growing. The company has slipped from spectacle into infrastructure. All true, yet a $1.5 trillion valuation still asks investors to believe in more than present success. Curious, it asks them to believe that SpaceX can keep widening its lead while moving into businesses that are larger, messier, and more politically exposed than launch. That is where the cheerful rocket story begins to smell faintly of risk, which is usually when finance people start adjusting their glasses and pretending they discovered caution. Satellite Today's Analyst Roundtable put the problem plainly. Tim Farrar argued that the core Starlink business by itself does not strongly support a $1.5 trillion valuation, and that the case depends on more speculative future opportunities as well as investor belief in Musk's broader ambitions. In other words, the current business is impressive, though the really giant number rests on what SpaceX might become next. That future-facing bet includes direct-to-cell expansion,
higher margin enterprise and government services, Starship eventually lowering transport costs further, and the company managing not to stumble under the weight of its own scale. It also assumes regulators, competitors, and national governments will continue letting one private firm become this central. Markets will often fund a grand theory of the future. They do it with the eager expression of a man buying a castle he has only seen in fog. And that is what makes the valuation story so fascinating. The bet is no longer simply that SpaceX is winning. The bet is that SpaceX is becoming one of the systems through which the future itself will run. What investors are really buying here is a theory of the future. They are buying the idea that the next great infrastructure company will not look like a railroad, a phone company, or a defense contractor in the old sense. It will look like a strange hybrid that does all three while also tossing hardware into orbit before breakfast. Curious. That is why the SpaceX story keeps escaping the usual categories. Barron's noted in December that private market pricing had already pushed SpaceX to roughly $800 billion, with much of that value tied to Starlink's rapid growth and investor belief that an IPO could drive the company far higher. Once a company reaches that size before public listing, the market is no longer asking whether it is successful. It is asking whether it is becoming foundational. Pause. The strongest version of that bet is easy to state. SpaceX controls launch. It operates a giant satellite network. It is pushing into direct-to-cell service. It keeps finding ways to insert itself into the communication stack that modern life depends on. The Wall Street Journal reported last year that SpaceX agreed to spend $17 billion to acquire EchoStar spectrum rights, a move meant to deepen its push into satellite-to-cell broadband and widen Starlink's mobile ambitions in the United States. That is not a side quest. That is the behavior of a company trying to own more of the terrain beneath the future phone call, the future text, and the future emergency signal. And once investors start seeing SpaceX that way, the valuation argument changes shape. The question is no longer whether $1.5 trillion sounds excessive by the standards of a launch company. The question is whether the public market is ready to price a firm that may end up sitting underneath communications, defense, transport, and a good portion of the space economy at once. That is a grand wager. It may prove too rich. It may prove oddly early. Either way, by this point, we are no longer arguing about rockets. We are arguing about who gets to build the scaffolding of the next age. The headline sounds outrageous because it forces people to admit how much has changed. SpaceX used to be treated like a flashy rocket company with a charismatic frontman and a taste for spectacle. Now the valuation debate is circling a different fact. Curious, SpaceX may be turning into one of the hidden load-bearing structures of modern life. That is a much bigger thing. A company that launches its own satellites at industrial speed, sells recurring global connectivity, works its way into civil and military systems, and pushes into direct-to-cell service is not playing one game. It is stacking games on top of each other until the whole structure starts to look less like a company and more like an ecosystem. Thoughtful. That is why the old instincts fail here. People hear rocket company and reach for the mental box marked aerospace. That box is already too small. SpaceX is part telecom firm, part transport system, part strategic asset, part state partner, and part bet on a future where orbit matters far more than most people noticed. That does not mean $1.5 trillion is guaranteed to make sense. Markets can get drunk on destiny talk. They have done it before, and with less interesting companies than this one. Still, the reason serious people are entertaining the number is not hard to see. If SpaceX keeps widening its control over launch, communications, and access to space, then investors are not buying a flashy stock. They are buying a stake in the scaffolding of the next era. And that is the real story. The IPO chatter matters because it suggests Wall Street may finally be catching up to something the space world has understood for years. Space is no longer a sideshow. It is becoming part of the machinery of daily life. Once that clicks, trillion-dollar talk stops sounding insane and starts sounding like an argument about timing. If you enjoyed this video, like the video, comment below, and subscribe to the channel. Tell me whether you think SpaceX is truly worth $1.5 trillion or whether this is another case of the market falling in love with a shiny object that happens to launch itself into orbit.
This has been Gene Botkin with Eleonarda. End transmission.